All right. Today I want to talk about how to stop blowing your trading account. Right. So, um, this will be a short presentation, and I will be looking to put down as much information as I can share with you guys in this video. Right. So now let's go through it. How can you get uh the result of not blowing your trading account anymore? Right. So let's just go through it quickly. Now you have here that there are two ways people usually blow trading accounts. And the first one is blowing a trading account intentionally. So here the person has decided to bet his entire account on a single trade or on a few trades. The goal of this is to get quick returns to reach a certain figure so as to afford a certain purchase, or just to simply flip the account. To flip the account means to double it, triple it, just gets multiples of the account back, right? As profit. Usually, the trader is fully prepared to lose the entire amount. So, this person is already prepared and is like, okay, if this account is lost, I already had a plan for it. All right, I already had this plan that okay, I might lose this account, and then there's people that unintentionally blow their accounts, like it happened as a surprise. Okay, so in this case, the trader loses his entire capital, which is usually very valuable, to just a single trade, which goes bad. This could be caused by sudden volatility, news, or just normal market movement. The only difference between this and the first scenario is that the trader wasn't expecting to lose all his money, it just came as a surprise. In this video, I will look to tackle this second scenario, alright? So this second group of people, they just like trading randomly using bad risk management and then trying to see if they'll get good results from their trading. But it usually does not work out like that. It doesn't work out like that. Okay. So moving on. So you see how to stop blowing accounts. How to stop blowing accounts. There are three main things you need to have under your belt. The first thing is that you must have a strategy, okay, complete strategy. The two is that you need to have statistics of your strategy and of your own personal trading performance. And the last thing you must have under your belt is risk management. There's also the part of psychology, but that is a very, very big topic that I will not be covering in this video for the sake of time. All right, so you need your strategy, statistics, and risk management. And basically, I believe that psychology can be built slowly if you work on these three right here. Okay, you work on these three and you're disciplined. You force yourself to be disciplined to stick to these, then your psychology will naturally improve. So let's just move on to more details about these three things I've listed here. Okay, so now we start with the strategy. Okay, starting with the strategy, right? So now your strategy, first things first, your strategy must have a stop loss because your stop loss is what ensures you from excessive loss. All right. So if you don't have a stop loss, like why do you expect your account to not be blowed? Right? How would you expect that? Okay, what do you expect to stop the market from moving against you? So if you're not present and then there's a sudden market movement, you don't have something to help you prevent excessive loss. Okay, a stop loss is very important. A strategy that doesn't have a stop loss, in my opinion, is incomplete, right? So if strategy has a stop loss, okay, this is where my trade is invalidated. Okay, so once the price gets here, that means my trade idea is wrong. Don't be afraid to be wrong in this market. Okay, it happens sometimes, it happens. Okay, so if you're wrong, take your L proudly and move on to the next trade because you're not looking to get all the money possible from just one trade. You're looking to make profit off of a series of trades, So let's say over 10 trades, 20 trades, 30 trades. You're looking to make a profit after that. Don't try and suck out all the profit from just one trade. Okay, So when you don't use a stop loss, you're trying to prove to the market that you cannot be wrong. Okay, so oh yes, the market is still going to move in my favor, so there's no need for a stop loss. Let me just remove it. All right. So always use a stop loss, please. I won't like to dwell too long on this matter, but just use a stop loss. The second thing is that your strategy must have a target that's easily attainable. All right. So one mistake that some traders make is that they set unrealistic targets because they want to seem like the best trader out there. Okay, they want to seem like the best trader for people that are following them, to people that they have on social media and all that. All right. So that is not your job. Your job out here is to make money for yourself and to take care of yourself, your family, and whatever else you care about. Okay, so don't be trying to impress no people that are not even involved in your life. All right. You don't have to set a target of 150 pips when the realistic target for your strategy or for the time frame that you trade is 50 pips or 40 pips. You understand? So set the target as easily attainable. So you know that okay, 5 times out of 10, if this trade goes in my favor, this target will be hit. All right. So set a reasonable target like that, something that is easily achievable. Okay, not something that will happen once in 10 profitable trades. Okay, so that's one part. And then the third part is that your target must be at least twice the stop loss, meaning you must have a good reward to risk ratio. Okay, have a good reward to risk ratio. That is making more money than you risk on the trade. So that is the third part of strategy I'm going to mention here. And then the next thing is your statistics. Your statistics means that okay, you want to backtest your strategy. All right, you should be looking to backtest your strategy and find out the metrics of it. So how often does it give you profit, right? You backtest it. Okay, over the in a certain pair, maybe Euro USD now, you test 30, maybe 30 examples of your strategy. How many times did it work? How many times did it not work? And what is the risk reward ratio when it worked? What is the risk reward ratio when it didn't work? Those kind of things, you need to note it down. You need to have the metrics. For example, when backtesting my strategy, I have like 80 to 90% win rate on it. Okay. And apart from backtesting your strategy, you also need to have statistics of your own trading. Okay. So record your own trades. When you trade, put it down. Okay. This is the outcome of this trade, and this is the reward to risk I got out of it. This is the percentage profit I got out of it. Things like that. Because what I discovered is that after backtesting strategy now, I got about 90% win rate. But after trading it on my own in real life, okay, I'm getting 66 to, or let's say 60 to 70% accuracy. You understand? Falling from about 90%. So you can see that that element of human error must be there. So that's why you also have to record and have statistics for you in your personal trading life. And what your goal should be to make sure that okay, your own personal trading should match up to your strategy slowly. Okay, so you want to increase your win rate slowly by learning new things from personal trades and then improving on your mistakes. Okay, so that is the importance of having statistics. Okay, having your own personal stats. Okay, this is the result from this, things like that. You understand? So let's move on. The last part you need to have under your belt is risk management, right? Risk management. And basically, this means managing your risk properly, not using too much risk on a single trade. So, the recommended risk per trade for round in the trading industry is 1 to 3% risk per trade. Okay, so on your personal account, use 1 to 3% risk per trade and never exceed it. Or if you're trying to flip an account, for example, you're trying to flip your account, use a maximum of 10 to 15% risk per trade. So let's say you use 10% risk, you could be expecting something like let's say 20% or 30%. Or if you have a very, very good strategy, you might expect up to 100% in one single trade, right? So something like that. Have a reasonable risk to reward ratio. Have a reasonable risk to reward ratio. Have good risk management. Don't risk more than 1 to 3% per trade. So now let's go to actions you should do now. Things you can start doing now to make sure that within the next 90 days to, let's say, 6 months, you have stopped blowing accounts and you might even be looking to become profitable. All right. Or you might have even become profitable. Let's just put it that way. Okay. So the first thing is that you need to get a complete strategy. Okay. A complete strategy includes the following. One, you must have a valid entry criteria. Okay. So what must you see before you get into a trade? And you must have a stop loss. You must have a favorable target. Also, you must get your direction from the higher time frame. Very, very important. Your direction must be from the higher time frame. Okay. You must get your direction from the higher time frame. Your targets can also be from the higher time frame, but make sure that it is attainable. Like I said earlier, it should be something that is easy to hit. Don't go and set a higher time frame target that's very, very far away when you are entering on maybe the 1 minute chart or the 5 minutes or 15-minute chart. Okay. So have a bias from the higher time frame and then go down to a lower time frame to set your stop, your entry, and your target. Okay, your target can be on the higher time frame, like I said before, but make sure that it is attainable and reasonable. You get me? So also you must have a criteria to move your stop to break even, which is know how to manage your trades properly. Okay, when shall you move your stop loss to break even? When shall you even move it into profit? Things like that. You need to be thinking about it. Also, what should happen in the market for you to say, okay, this winning trade might not really work out as I thought. Okay, there's some winning trades that you have to get out before it reverses on you. What should you see that will make you think, oh, I think this trade is reversing. Let me get out of it now. It has gotten, this is as high as it will go. All right. So you should also get things like that. It's not compulsory, but it would really, really help your profits. Okay. Then you need to know your time periods for trading. Okay. So what time periods is your trade typically showing, or when do you usually find such trades? Is it in the morning, in the afternoons, in the evenings? What is the time? Is it during the weekend? Is it on Mondays or Tuesdays you get your trade ideas? Or do you wait for the first week of the month, second week of the month? Things like that, depending on your trading style, your the time frames that your trade usually forms on. Okay. So you also have to set and look for the time frames that are required in your trade. Maybe you have a strategy that you get the entry on the 15-minute chart. Okay. So for that kind of strategy, you need a higher time frame bias. So is your higher time frame bias going to come from the 1 hour chart, the 4 hour chart, the daily chart, things like that? You need to make sure that okay, I know the time that I would be looking to trade. I know the time that I'll be looking to exit my trade. Things like that. Okay. Also, you need to make sure that the trading times matches your lifestyle. Okay, so don't be, let's say you have a job and your job is very tasking. You need to you have so many responsibilities. You should not try to be day trading in that kind of with that kind of lifestyle. Okay, you should not try to be day trading in that kind of lifestyle. Okay, also your personality. Are you very patient? Are you an impatient person? Okay, so if you are very, very patient, then something like swing trading might appeal to you, something like short term trading might appeal to you. But if you're not very, very patient, then you should look towards day trading and scalping. Okay, so make sure that your strategy and the time frame that it occurs on matches your lifestyle, your personal lifestyle, and your personality. Okay, so you also need criteria to cut losses short and maximize winners. Okay, some trades, your it's a popular axiom in the trading industry that okay, cut your losses short and allow your winners run. Okay, so if you cut your losses short, why not maximize your winners? Is there a way you can add positions little by little into a winning trade to help you make more profit than you initially got in with? Okay, think about things like this. Is there any strategy or methods that you can use to increase your potential profits from a trade without necessarily inflating your risk? Okay, without necessarily inflating your risk too much. Let's say you get into the trade with 1% risk and it's going very, very well. Is there a way to add more risk? Okay, maybe when the 1% risk gets to break even, is there a way to add new trades? Maybe add an extra 0.5% risk to the trade so as to make more money. Okay, and also, is there a way for you to cut your losses short before it hits your stop loss? Okay, is there a way to know that okay, the market is reversing on you and you need to cut your losses short? Okay, so these things you need to find a way to implement your strategy. I have these things for my own strategy. Okay, I think everybody can find a way to impute these elements into their own strategy. You need to study, improve your system little by little. Okay, second thing you need to do is to backtest and demo trade your strategy for a few months. So first of all, you backtest. You find out how many times did it work in the last 1 month, 1 year, 6 months, 3 months, etc. Okay. Then after backtesting and finding out the strike rates, you need to demo trade your strategy, which is like forward testing it. Okay, you can say I'm forward testing it. So I'm testing my own win rates. Okay. So you demo trade your strategy for a few months and then you get some insights to your own personal win rates, your own personal statistics, how good you are at executing your strategy. Okay, how often you make mistakes, etc. The third thing you must do is to journal. Journaling is so important. I cannot stress this enough. Journaling is like one of the biggest things that helped me to turn my trading skills around when I was having issues with profitability. Okay, so between January to March, I was working on my strategy to make it better. I had already been profitable earlier, but at that point, I was having issues. I was getting many losses back to back, and I was like, "What's wrong?" So I had to go quiet for about 3 months, and then I was back on track, and I was even better than how I was before. Everything was much clearer to me because I did the work. Okay, so you must journal your price movement daily or a few times a week. All right, so whenever the day ends, you check out what happened in the market, you record it. If you took trades, record the trades you also took. Write things about things you learned, etc. Okay. Also, you need to record your trade results for every single trade. This is so that you can know your statistics and improve it. You can easily use like a spreadsheet, maybe Microsoft Excel or Google Sheets or Notion or whatever you prefer. All right. So you must record, okay, here I made 1 hour, 2 hour, 3 hour. I entered here, I exited here. It was a profit, it was a loss, things like that. Okay. So this will help you know your win rates and many other things about yourself. As much statistics as you can get out of it, you get out of it. Okay. So depending on how much time you have, some people might have time to just record, okay, win or loss, win or loss, win or loss. Okay, but personally, I record the date, time, the entries, the exit, the results, the eventual reward to risk I got from the trade, things like that. Okay, so record your statistics. And the last thing is that you should now go ahead to trade a real account to build your psychology. If you are profitable during your demo test, okay, that's demo trading your strategy for a few months. Okay, this helps you to boost confidence. So after doing that, you should trade a real account to boost your psychology. If you get to a point of profitability in your demo testing stage, all right. And if you are profitable in demo for a few months, you should not have any problem with a real account because to me, it's exactly the same thing. Okay, just need to apply what you did in your real account, in your demo account, and do it again in the real accounts. There's no difference. Don't let anybody tell you, okay, demo is bad, or demo doesn't give you the real blah 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 blah. Okay, they're exactly the same thing. Okay, if you trade on the demo, if you trade very very well on your demo, you use good risk management, you use a good strategy, your psychology is okay, you respect the account, you don't just trade haphazardly because it's a demo. Okay, you apply the same system to a real account, you're going to have similar results, or even better, because in the real account you'll be more serious. You understand? So that's that for that. And the last step you need to take is that you should use no more than 3% risk per trade. Preferably, you should use 1% or less at all times. All right. So just take a screenshot of this page, okay, and go and solve your own problems. Don't just watch this video and again continue scrolling on social media, doing fuck all with your life or whatever. Okay, doing whatever you like. Okay, just write down all these things and then find a way to implement them into your own trading. You get me? So it will really help you if you actually do what I have asked you guys to do here. If you actually take these steps, you are going to stop blowing your accounts, guaranteed. If you take these steps here, I am assuring you that you will not be blowing accounts unexpectedly ever again. Okay, you are going to get to the point where you manage your risk well and then you expect whatever is happening. Okay, and with this, I'm going to say goodbye. Subscribe and like the video if this helped you, and see you in the next video. Bye.